Paycheck to paycheck, no money for savings. Sustainable, long-term financial freedom may present a jeopardizing pursuit. But these secret 10 key financial habits I will share with you will break long-term financial freedom down into smaller chunks with actionable goals, which will conjointly attribute to early retirement. Keep watching for a bonus strategy at the end of the video. Firstly, pay off high-interest debt. This involves student loans, credit card debt. Secondly, creating a 3 to 6 month financial emergency fund. This should include all your needs to survive, such as rent, food, utility, etc., and exclude wants, for instance, clothes, the latest watch. Next, step 3. This step is what I like to address as the 1% investment habit. This involves investing just £5 every day into an index fund, for instance, the S&P 500 to grow your money, to combat the effects of inflation. This is because index funds like the S&P 500 diversify risk, meaning if one company's share price/stock was to go down, the impact is completely offset by the other S&P 500 companies, ultimately mitigating financial risk. Step 4. Budgeting. This is pivotal in achieving financial freedom and early retirement, simply since knowing your financial situation, expenses, income sources, and spending habits assists the financial planning process I will outline in a moment. By the way, if you are new to financial budgeting or puzzled by the numbers, click the link in the description to access your free simplified money budgeting tracker to simplify the money tracking process to stay on top of your personal finances. Step 5. Financial planning. After filling in the free simplified budgeting tracker tool, I want you to analyze the needs you are spending on and just simply remove one or two of them and allocate that money to a dedicated ISA account. ISA accounts are essentially tax-free savings account which earn non-taxable interest, therefore avoiding hidden deductions and a great way for tax-free investment savings. Step 6. The 50-30-20 rule. Simply put, look at your budgeting tracker and ensure 50% of your income is allocated to needs, 30% to wants, and 20% to savings and investment. Then analyze your wants and remove unnecessary spending to increase the 20% savings and investment percent to further contribute to obtaining financial freedom and your early retirement goals. Step 7 is to get an additional source of income. This could be working another few hours at your job, a side hustle, or passive income. Most people tend to focus on setting aside more money to contribute towards savings at the end of the month, rather than focusing on increasing their income. Many fall for this trap. To mitigate this, focusing on income generation and saving between 10 to 20% of that additional income is a game-changing financial strategy that will help in the pursuit to financial freedom. Step 8. Understanding taxes. Having a solidified or even a basic understanding of taxes can surplus wealth and further assist financial freedom. This is because there are many legal ways to reduce tax liabilities. For instance, operating as a business instead of an individual, which links to the previous step of an additional stream of income. For higher net worth individuals seeking professional tax advisory services could extensively reduce tax bills and further assist early retirement plans, therefore allowing more money to be reinvested into retirement plans and stocks to grow your money. Step 9. Identifying harmful financial spending habits. A good example of this is buying the latest car out of the showroom as a showpiece, when realistically, your salary reflects inability to afford such a purchase. Eliminating harmful spending habits may open up new money opportunities for further investment, rather than funding financially unjustified purchasing decisions. When you have identified harmful financial spending habits, for instance, dinners out every week and buying a new set of trending shoes each week, limit these habits to once a month. That way you are building your financial future and enhancing your early retirement whilst not making major sacrifices. Step 10. Becoming financially literate. Investing in financial books, knowledge, and networking opportunities is a great way to improve your existing financial literacy. It is evident that those who are more financially literate are also more mentally healthy, therefore living financially free and retiring early. Just 15 minutes a day of reading, or even watching one finance video like mine will surplus your financial freedom journey and fill in financial gaps to access early retirement. Bonus strategy: as you have watched this far, I am going to share a bonus strategy, the 1% used to maximize financial freedom and early retirement. Mentoring. Yes, mentoring. This is a great way to seek professionals' opinions on your financial choices and identify the pros and implications of each financial decision, whether investing, buying that new house, getting a mortgage, or how to pay off high-interest debt. Mentors will always guide you in the correct direction. To find a mentor, simply reach out through a simple message and try offer some value to them as well if possible, to nurture the relationship without expecting anything in return. This way, when you have financial questions to ask them, they will remember the value you provided to them and should be happy to assist you with financial questions. If you liked the video, subscribe for more personal finance maximizing strategies and comment topics you would like to see me cover in the financial future.